Hello everyone, welcome back to my channel, The Mortgage Guy 101. If you're dreaming of buying your first home, or maybe your next one, here in Massachusetts or anywhere else, one big question always comes up. What exactly is a down payment, and how much do you really need? Today, I'm breaking it all down for you step by step. No jargon, no fluff. By the end, you'll know what it is, what's required, and what smart ways to make it work for your budget. Let's dive in. First things first, what is a down payment? It's the upfront cash you pay toward the purchase price of your home when getting a mortgage. You pay this lump sum at closing, and the lender covers the rest with the loan. Think of it as your instant equity, your skin in the game, we'll call it. It shows the bank that you're serious. It lowers what you borrow, which means lower monthly payments and less interest over time. Why does it matter so much? A bigger down payment gets you better loan terms, lower rates sometimes, and huge one here, it can help you avoid extra costs like private mortgage insurance. But here's the good news. In 2026, you don't need the old school 20% to buy a home. So let's look at the main loan types and their minimums right now. First, starting off, the conventional loans. Now, these are the most common non-government ones. Often start at just 3% down for qualified buyers. Some programs go as low as 3% for first-timers. Now, the next one, FHA loans. These are super popular if your credit's a 580 or better, requiring only 3.5% down. Now, if it's a 500 to 579 credit score, usually you're going to have to require about 10% down. Now, VA loans is another one here. And these are for veterans and active duty. 0% down in most cases. That's right, you heard me. 0% down. That's awesome, right? Well, they deserve it. The next one as well is USDA loans. These are for rural and suburban areas. And these here, crazy be it, are also 0% down if you qualify on income and location. Now, these are pretty game-changing, right? I would say so myself. Now, in reality, first-time buyers across the country are putting down around 6 to 9% on average, sometimes up to 10 to 18% depending on the market itself. But 20%, that's the magic number. Only if you want to skip private mortgage insurance completely, that would be, of course. Here's a quick breakdown of what different amounts mean for you. Now, you could have low down payments as low as 0 to 5%. Now, if you're doing something like that, there are some good pros on that. The pros is that you can get into the home faster by reducing the time needed to save, first off, and also you get to keep the cash for emergencies or any fixes you need to do as well, which is a big plus. However, there are cons of that as well. Usually you're going to have higher monthly payments. Usually PMI or MIP adds an extra $50 to $200 additional a month that can be there until you hit that 20% equity point, where then it may disappear then, unless it's an FHA loan. It could actually stay in that instance, but we'll get into that when we get into FHA loans. Now, there's also a moderate point to this as well. If you're between 5 to 19%, you'll generally see a balance between speed and some savings on interest and insurance, typically. 20 or more percent, pros are clear. There's no PMI on the conventional loans, which is a big plus. You'll have lower payments, and you'll have less total interest paid, which is stronger starting equity for you for sure. And your offer also looks way stronger in a competitive market as well. So they'll definitely want to take that. Higher chance they'll want to take that, we'll say. Now, on the con side, though, you'll have less personal cash for emergencies and fixes, which could be a negative there. Now, this leads me to the next engaging question here, and that is, how much should you put down? That's a big question I see all the time. Now, it depends on your savings and your goals, your interest rate right now, and whether you're okay with PMI for a while as well. If draining your emergency fund stresses you out, well, a smaller down payment might be smarter, especially with home values generally rising. But if you can swing more, you'll save big over the long term. Well, one other thing I want to get into is what I consider to be called the must-knows. These are things that really those should know. The first is your down payment. It usually comes from savings. It can also come from checking as well. But gifts from family are totally allowed as well. Just make sure they're documented properly. With regard to earnest money, that's another one. That's pretty much like a deposit that you make. Usually it's in the area of 1 to 2% at the very beginning. It gets credited towards your down payment at closing. Don't forget also the closing costs. Those are separate. Usually 2 to 5% of the price for fees and such. Appraisals as well, title, etc. It's all budgeted in there. You want to make sure you're budgeting for both of those. And here's something that could help in your state or town in 2026. It's called down payment assistance, the down payment assistance program. These programs here, they're stronger than ever. So for example, in Massachusetts, there are down payment assistance programs that offer up to $30,000 in assistance for eligible buyers statewide. They also have deferred loans and amortization options as well. There are also local programs in various towns and cities that can offer savings for first-gen buyers, up to $20,000 in some areas. So there's definitely great options out there for down payment assistance for sure. Now, if you reach out to me directly, I can help to see what best fits for you with regard to options like that, because that is a background area I know very, very well. So wrapping this up, down payment assistance is your key to home ownership, but it's more flexible than most people think. Whether you go low to get started or save for more to save money long term, the important thing is getting pre-approved and talking to a lender. So if you're planning to buy, drop a comment. What's your biggest down payment question right now? Place it below. I'll be happy to help. Like and subscribe if this helped. Hit the bell so you don't miss any more home buying tips from the Mortgage Guy 101. And thanks for watching. You've got this. See you in the next one.